Hey everyone, welcome back to another video. And today I wanted to go through a few of some of the trades I've made over the past month that end up being bad trades for, at the time, reasons I didn't really see in the moment. And I basically want to preach the importance of being patient and why only trading the highest probability trading setups is really good. Because, obviously, if you stick to trading the best, you're probably going to have a higher win rate, you're going to have a higher profit factor, and you're probably reinforcing your patience and your selectiveness by being picky. But the other side of that is when those trades don't work out, right? And of course, not every trade is going to work out because, you're not going to win every single trade, right? You can't be perfect. Even the best traders who have really high win rates, they still have losing trades sometimes. But for beginner level traders and, intermediate level traders and those who are not super advanced or trading at the professional level full time, you're probably going to be making a lot more mistakes than, of course, a professional level trader. So even for someone myself who I try really hard to trade what I think are the best trades, I still make shitty mistakes sometimes. And, I'm not surprised by it. And the thing that I appreciate when I have a bad trade is that I get something to learn out of it because it's very likely that I missed something very obvious. Um, and let's say you weren't trading the best and you were just trading, whatever looks hot that day, and you're basically just throwing money at the wall and seeing what sticks wherever, it's harder to really get good info out of that because obviously, if you're trading mediocre setups, then your mistakes are going to more or less be summed up of, well, don't take a trade or don't go long here when, the SMA 200 is like a percent away from your entry price, right up above. Like, that's just not a good trade. But when you're really sticking to what you perceive to be the best, you get a lot better insights into like what went wrong with this and what can I learn from this now so that going forward I can pick even better trades and, not make that same mistake again. So, anyways, I wanted to talk about a few stocks that ended up being bad trades and talk about what I learned from them because I think this is going to be a helpful video for um, newer, beginner, intermediate level traders. Any pro that's watching this might think, well, obviously you shouldn't have done that trade, but that's whatever. I just want to make this video because, this is really for me and for, anyone who watches these videos with the intent of learning something or interest or just wants to see what I'm up to, whatever. Anyways, let's start with the longer term market context. Now, since obviously the end of October of 2023, we've had a massive bullish run. We finally had one little tiny pullback for the first week or so of the new year. And all it took was one bullish trend day to basically take back all of these losses here. And now we're knocking on the door of the all time high, which we're probably going to break through within the next week or two. Um, I think that's going to happen. Others think it's going to happen. It's probably very likely. And these few trades I wanted to talk about were all longs, meaning I took them in the direction of the longer term market context because, well, I trade with trend. Um, and I wasn't doing anything silly right off the bat, like trying to time the market top and short something. So, anyways, let's get started with the review of these trades. So the first trade I wanted to look at, and I'm going to go ahead and just minimize this market view for right now. The first trade that we're going to look at is RDFN or Redfin. I took this trade on the 28th of December, so it was this candle here. And I took this trade on this particular day because at the time I took the trade, the candle, now obviously when you look back at the close, right, this ended up being a bearish hammer. But when I entered the trade, it was an intraday trade that I thought the daily chart looked good enough for a possible swing. I entered basically right about here next to the previous high of the day. And this is actually where obvious mistake number one comes into play. So let's go ahead and look at the 5-minute chart of this day to see what happened. Now, as a lot of you know, I try to trade pullbacks, or in other words, I try to get a good entry point on stocks by setting alerts to wait for some kind of dip so that I can evaluate what the pullback was like and so that I can get in at, just probably a better price. Um, so where did I fuck up on this trade? So Redfin, I set an alert on this trade. I forget where exactly. I think I may have set like a Heikinashi reversal. So if we pull up the Heikinashi candles, I was waiting for a bullish Heikinashi reversal to come up after this pullback here, right? So basically got it somewhere around these candles here, probably this candle or this candle. And yeah, it must have been this candle. And when I saw this, I was like, all right, I'm going to wait for this now to get above VWAP because I wanted to make sure this thing could get above VWAP before I would go long. And so I went long pretty much right after this candle closed. This one right here at 12:35. Basically, I went long at 12:40. So right when this candle had started. So right away, can you think of any mistakes that I made by going long here? And remember, the market context was longer term bullish. Okay. Now, obviously, you can look at the daily chart and maybe tell right away what were some mistakes, perhaps on the longer term for this particular chart. But let's just look right away at the 5-minute chart. Well, the first thing, well, now that I'm looking back at it, is we had this pullback off of the high, um, and it was relatively aggressive, right? And we can tell that because these candles on the way down were long. They had These were key bars, meaning the body of the candle was very high. It was high volume candle and it closed basically near its low, right? This took out a pretty good portion of this move up here, right? In fact, we actually closed below the open of this long green key bar, and we generally like to not take out the halfway point or the open of these long green key bars. So right away, this was a sign that, okay, maybe this isn't the strongest, right? And another thing, of course, is that not only was this a relatively heavy volume pullback, but we also pulled back below VWAP. And on top of that, that also happened to coincide with the previous high of the day right here. I think it was, no, it was right here. So what I'm gonna actually do is go ahead and drop a horizontal line here. And for a little more context, when I took this trade on this particular day, I didn't have this horizontal line drawn in, meaning I actually wasn't aware of the prior day's high, which was another mistake because I should have realized what was happening. Because again, had I realized that the stock actually dipped below not only VWAP but the prior day's high, and that my entry point was right when it closed above the prior day's high, I would not have taken this trade. So I went long here. And you know what? Let's do one more thing. Let's put up the, oh boy. Okay. Well, I just put up the SPY overlay and everything kind of reset back. So bear with me here. I am going to get us back to that day I went long. And I think it's right here. Yeah. Okay. So here's the market, right? I don't know what the 1OP cycles were, but you know, around my entry point on the 29th, sorry, this keeps getting messed up. Sorry, okay, so here's what the market was doing. It's kind of just chopping around. It's going sideways, maybe a slight, yeah, it wasn't even really going up that much, to be honest. It was just kind of a range-bound market. Well, this thing started pulling back right after I entered, and I keep trying to beat around the bush here, but let's just get right to what my mistakes were. So number one, and this is on a 5-minute chart, number one, the pullback was rather aggressive from the high here, right? And it also had decent volume. So that tells you that these buyers who were buying here, well, maybe they weren't so aggressive because sellers were able to take out this long green key bar and they were able to drive it below the prior day's high and VWAP. Okay, so maybe I should be careful with this trade. So I get that Heikinashi reversal. We close above VWAP. We close above the prior day's high. And I enter right here. So why is this a bad entry point? Well, one, we already talked about the longer pullback here. Two, just because it closed above the prior day's high with one candle, that is not confirmation at all. What does confirmation mean? In order to be a lot more confident, with the direction of this particular move here, right? The smarter thing to would have been to wait for follow through on this breakout above the prior day's high, right? Just one close above it doesn't actually mean anything useful other than the fact that buyers were able to get the price above and to close above that level of resistance, right? We need another set of follow through candles that tell us that buyers are actually engaged here. And perhaps if you want to be even more defensive, and that probably would have made sense, especially on this trade, is if you didn't like this pullback, right, and you saw the stock starting to break out above the prior day's high and VWAP, you probably would have wanted to wait for that retest of the breakout above the prior day's high, meaning you move up a bit, maybe you pause or you get a little bit of a pullback. The stock never closes below the prior day's high and then you start to go up again. That would have been a much better entry point. So my mistake here was that number one, I didn't realize that this is the prior day's high. I was just looking at VWAP. And so this was just a really bad entry point. And of course, right when I entered, the stock just flings back down. And at the end of the day, I'm like, all right, well, that wasn't the best entry, but hey, I like the daily chart, so I'm going to lean on it and swing this because I was like, I have the SMA 200 here for support, and I feel that this stock has upside potential to, at the very least, challenge the entry point into this gap on this long grid candle back from August 4th. But what is not so great about this daily chart here? Well, first of all, right, before the market started to rally at the end of October, this stock was seeing some pretty heavy selling, right? Like really heavy selling. This was in fact much more aggressive move to the downside than the market was going through. I mean, this thing pulled back at one point all the way down to basically $4.30. So yes, this stock of course went up when the market had a giant run, but it wasn't super aggressive stacked candles, right? No, of course not. This move was choppy, mixed overlapping candles, lots of retracement in these. You had overnight gaps down after a big day up. This was not the best, highest probability pick out there. Okay, so we get a gap up on, high volume that breaks above the SMA 200. That's cool. And I was looking at this like, well, yeah, of course, that makes sense, right? This was a great level to go long because my support is nearby and I have a lot of upside potential. But what about this breakout on these days here was nice? There wasn't really a whole lot that was nice, right? Because when we break out through these technical levels, we want to see follow through right away. And what did this stock do? It chopped up, down, up, down, up, down, mixed overlapping candles with long wicks and tails, lots of retracement, and down here, we're missing a key ingredient, which is heavy volume. So, and if you look at the relative strength indicator, it was weak to the market. So I basically had two big components, key components on the longer term chart of this trade that were missing, which is that relative strength and that heavy volume. And the price action, right? If you were looking at this here, and then this one candle that broke out of this little compression, and then the candle the next day where I went long, that was, at the time forming a nice little bullish candle, it wouldn't really be easy to predict where this thing is going, right? Because up until these two candles here, it's basically been chopping around. So in other words, this wasn't a very high quality breakout. And when you look again at these two candles, much like these candles, this is also really low volume. So that means that the conviction of buyers really were not strong. So the longer term context of this trade was definitely not high probability context. Because again, we're chopping around here. This is not an aggressive breakout above the 200 SMA. Longer term context, this chart and this stock in particular has been rather weak. And, well, we know my M5 entry was pretty crappy for the reasons we discussed. So, anyways, I was under the assumption, well, the market's going to float higher, which it pretty much had been. But the stock just kept pulling back. Here we get closer to the SMA 200. Then we kind of found a little bit of support, it seems like, right? The stock never really closed below it. And then we had this really long green key bar off of the SMA 200. And to me, I was like, hey, this is great. This confirms the strength of the stock and that support at the SMA 200 is going to hold. In fact, this was such a big day up, this was like a 10% move to the upside or something. I actually ended up adding a little bit to this position at the end of this day because I really liked how this long green key bar looked. And I was technically adding to a losing trade, but I wasn't doubling up or anything like that. I was adding what I thought was a fair amount to the trade. It wasn't anything big by any means. And technically speaking, I thought, well, I can justify it because this candle here showed me that buyers were really aggressive because it closed on its high, had heavy volume, aggressive price action to the upside. But when I look back at it now, it was also, well, it was still trapped inside of this range here, right? I would have loved if it broke out above these highs here, right? Maybe closed here. That would have made me feel a lot better in hindsight. So anyways, I don't think adding here, again, in hindsight, was probably the best idea. And to begin with, or to reiterate, I should have just never entered this trade to begin with. And now I know. Anyways, turns out that these buyers weren't so aggressive. This stock actually pulled back and then it ended up closing up below the 200 SMA, and I exited here because I was like, all right, well, this trade is just not good. So I took it for a loss. And what did I learn from it? Well, now I know that this wasn't a high probability trading setup, even though, support was close-ish buy and I had more upside potential. This price action here really was not suggestive of this is the highest probability trading setup because this is just mixed overlapping candles on light volume. This breakout can't be trusted yet because, again, we don't have follow through. This is light volume and we need more confirmation. So lots of things I messed up on here, let alone the intraday entry that ended up just, oopsie. I basically got in right at the high here and then we never saw that high again. So bad trade. Okay, let's go to the next trade. And that trade is SNAP, Snap. I took this trade earlier this week. I believe it was the 9th here. So let's go ahead and look at the 9th. And this is the longer term D1 context, or the D1 chart for Snap. Now this right away looks better than Redfin does, right? Because we have a much stronger move to the upside than Redfin, right? We don't have all these mixed overlapping green and red candles. We're not below the SMAs. Excuse me. This stock has a really nice grind up with that longer term market rally since the end of October. So I went long here. And what did I like about it on the daily chart? Well, I like the fact that when I went long, it was above the highs of all of these candles here. It was above the open of this red candle. I really like that. And I was like, yeah, this is a good trade. But right away, right, the stock still technically was not above the high from here. So as far as a breakout goes, it would have been a much better trade, technically speaking, on a longer term trend if this right here had been broken to the upside, the high here. Now maybe you can say, well, this technically is a bullish flag, right? Yes, we pulled back a little bit here, but the stock has made a nice move up. And that's true, right? But this move to the upside, although it's nice, it still isn't like super, super aggressive. And you can tell because the volume when moving up was relatively light. So buyers are not super, super aggressive. So I'm still missing that heavy volume component, much like I was on that Redfin trade. And again, I still don't really have a clean breakout here by any means. So right away, I don't have a great breakout and I don't have super heavy volume. Those are some obvious mistakes on the daily chart. So now let's go to the 5-minute chart and let me make sure. Yeah, the 9th. All right, so let's scroll back to the 9th. Yeah, here we go. Okay. And just for context, the market on this day was, this was after that bullish trend day. So the market was kind of just range bound more or less. It was kind of just like a pause day. So I didn't have a huge market tailwind. So what did I do? I noticed that Snap, probably around here or something, was making a new high. I really like that. The stock pulled back and I was watching it and I saw these stacked green candles and I saw this breakout to a new high. And I was like, oh yeah, I'm going long here because I really like this. And the D1 chart looks good enough to me. I'm going to go long here. And well, at first it was kind of working out to some degree, right? We stacked another long green key bar, and then the stock started to chop around a little bit. It was already losing some steam, and you can see the relative strength was gradually decreasing. And then all of a sudden, wham, long grid candle. Okay, well, yeah, the stock has been a little bit choppy. You can see that in the pullbacks. Probably gonna pause here above VWAP, and then we'll be fine. Get a little pause. Wham, another long grid candle. Okay, well, we're at VWAP now, so maybe this will hold. Nope, not this time. Stock just completely melted down, basically, below VWAP. And I was sitting here like, okay, well, obviously this is not a great trade. I don't actually know if I really want to swing this. And, again, I felt like I didn't really have a whole big level to lean on the daily chart to swing it. So I was like, I'm just going to exit here. And that's another mistake, to be honest, is that I didn't really plan this trade very well. Um, Ideally, all of my trades, I have a reasonable D1 level to lean on, like a breakout level, an SMA, an important trend line or whatever. Here, I don't know. I didn't really have anything other than, well, the stock has been strong longer term. But when I look back on it now, I never would have entered it in the first place because I just didn't have that really clean D1 breakout that I could lean on right away. And number two, and I think at least for an intraday trade, this is the most important, right? The market was not running away on a huge bullish rally. The stock, I mean, look at it. It's choppy, right? Goes up, goes down, goes up, goes down, goes up, goes down, goes up, goes down. What was the point of going long here other than, oh, new high of the day, right? Well, look at how many other times this thing made a new high of the day. Well, if you exclude this candle, right? New high of the day, pullback. New high of the day, pullback. New high of the day, pullback. Do you think that this is not going to pull back again? It surely is going to. I just went long because I was like, hey, this stock is almost breaking out on the daily chart. This should be a really good trade. And the tells were, well, this stock is just damn choppy. You can go long on it, but don't go long when it's breaking out to the new high of the day because every time it's done that up to this point, it pulls back. And you could look at LRSI. I mean, this thing looks more or less like a Six Flags roller coaster, right? Go up, you have a big drop. You go up, you have a big drop. You go up, you have a big drop. Just wait for a pullback. And I didn't really do that because while I was watching here and I was like, okay, maybe this is good, boom, it broke out here. And I was like, all right, well, my pullback, it was justified in waiting for. But again, I failed to see the intraday context of, well, this thing's probably going to pull back. So, yeah, not a good trade. And I will say the biggest thing as far as an intraday trade goes, well, I should have just waited again for a pullback after this new high of the day because it was going to come. And had I waited here for that bullish Heikin-Ashi reversal, I literally would not have ever seen it again for the rest of the day. So I would have avoided this trade. So now I know, going forward, any trade that one does not have a clean breakout on the daily chart with a nearby support level to lean on, I probably shouldn't even consider going in for a swing and maybe even a day trade because I don't have that breakout. And two, if I'm going to just trade something that's choppy like this, don't buy into it at the high of the day. Yes, we had a pullback and I entered, so to speak, after waiting for a retracement, but I really should have just waited again on a choppy stock like this because of every other instance of breakout to a new high, this thing has always pulled back. So not a great trade. Okay, I just talked a lot about Snap. Let's go to the next trade. This is SHOP, SHOP, and I can't remember, to be honest, exactly which day I went long, but it was the end of December, and I think it was the 28th of December, so it must have been this day. So what can we tell right away about this trade on a longer term basis? Well, sure, we've had a bullish move with the market up. All right. Now, do I have a technical breakout? No, I don't actually. We did have this breakout here, but what happened after this breakout? We kind of had a choppy move up, right? We've had mixed overlapping candles, right? That tells you that these buyers here who bought in here, yeah, they were defending this candle on this pullback, but this wasn't a really aggressive move to the upside. So it wasn't the classiest, greatest breakout of all time. It was a rather mediocre, lukewarm breakout. And two, the volume is really light. So again, Uh, no high volume here, and the price action is nothing to write home about. And then, of course, the market did pull back, and I was basically just flushed out right here on this candle, excuse me, here, this long red key bar, took out the open of this long green key bar, and it took out the breakout that the stock had made towards the halfway point of December. So my mistake here was that, well, this wasn't really the highest probability trade in that this breakout is nothing exciting. Buyers are certainly not super aggressive, and we can see that in the mixed overlapping candles here. So lesson with this, you need to have a cleaner breakout. You need to make sure that the breakout has nice sustained follow through. If you look at the relative strength here on this breakout, it's non-existent. This thing is relatively weak to the market. So there's probably a lot better out here than this thing, right? And when I entered here, again, we still weren't above the high from this candle here. So even though I was joining this breakout of this right here, this is still just nothing to get crazy about and go long on. So this was a bad trade. And I ended up exiting it on this because I didn't really have a whole lot of conviction in the trade. It turned out when the market decided to finally pull back just a little bit. So I should have never entered this trade to begin with. Okay, let's go to the next trade, TGTX. I went long on this trade, I think on also the 28th. So why did I go long on the 28th? Well, first of all, I liked the fact that we broke above the 200 SMA, right? Buyers tried to push it up. Sellers got a little aggressive here. They tested the 200 SMA, test. They weren't ever able to break below it. And so at the end of this day, I was like, hey, this tells me that buyers are engaged down here and that they want to push this higher. So my first mistake was that I should have waited for the next day to see how the stock opened and what the price action was like. So I basically didn't confirm this bounce whatsoever off the 200 SMA. Just because it was holding the support here isn't enough. I was basically too early on this trade and I should have waited the next day for that confirmation. And of course, I didn't get that. Stock closed right at the SMA 200. Next day, it gaps down and it opens up closes just below the SMA. Next day, gaps down again, closed, closed was 1691 and the SMA 200 was 1697. I could have technically argued to myself that I'll just stay in the trade because, to me, this tells me buyers are still sort of interested in this thing. But, again, the relative weakness and the fact that it closed below the SMA 200, I was like, I should just probably close this trade. And what do you know? The next day, the day after I exit, boom, long green key bar. All right, that's a nice candle. Next day, massive long green key bar. Next day, massive long green key bar. 3 stacked candles. Of course, that happens right when I exit the trade the day before. But in all honesty, sure, it sucks that I missed this, but I never should have entered this trade to begin with. I was too early. This bounce of support wasn't actually a confirmed bounce yet. I should have waited for the next day. So yeah, it sucks to look at this and be like, damn, I missed that. But ultimately, I just should never have missed this trade, or I should never have entered this trade to begin with. Okay. Yeah. And as far as the 3 big things that we're looking for, right? Technical breakout, relative strength, heavy volume. Do we have any of that? Technical breakout. Well, we did break out above the SMA 200, but again, I didn't confirm this bounce. So, no technical breakout. Relative strength, this thing was relatively weak, and the volume was not super incredible, right? Yes, this bounce day that I entered on did have high volume relatively, but the move before it wasn't super suggestive that, oh, this is it. This is the bounce we've been waiting for. We're going sky high now. So I was too early on that trade. Okay, now a fun one that we're saving for last. This is CRISPR. This is a fun one. Okay, so I went long on CRISPR on December 8th, and at the time I went long, this stock was, I think it was basically like 75 something or whatever. And I was like, all right, I like this. I saw someone posted in the chat room. It was Harry who posted it saying he went long on it, and I went to the chart, and at the time, the D1 candle did not look anything like this. It was all the way up here, and I was like, oh yeah, I really like this breakout. We have heavy volume. At the time I entered, there was a wimpy little pullback, and the stock was starting to grind higher again, and I entered on that pullback, and I was like, this is a great setup. I love this. This is going to be an awesome trade. What possible mistake could I have made here? Well, before the big no-no that I missed, that I will never ever miss again, number one, this price action here is really freaking choppy, right? Green, red, green, red, green, red, red, green, red, red, whatever, right? This is not aggressive price action. We had this nice breakout here, a long green candle. We were digesting these gains, right? And so I thought, all right, this is the time we finally get this bullish flag and we break out here. Okay, the big thing I missed was that CRISPR was waiting for the FDA approval of a new drug. And I had no idea that the stock, or that for this particular stock, that not even 5 minutes after my entry point, that this gigantic news release was about to come out. I had no idea, and I was silly because I didn't see a little bit below Harry's entry point when he posted in the chat that someone said, by the way, those who are interested in playing this, keep in mind that the FDA is literally about to release news. I had no idea until all of a sudden, long red candle, long red candle, long red candle on CRISPR on the 5 minute chart. And I was like, what the fuck is going on? And then I realized I missed a news release. Holy shit, did I make a big mistake. So the lesson here for anyone who is going along on a stock, especially biotech related stocks, make sure there's no pending news release. Just be careful. Don't enter and then have it turn out that all of a sudden they're about to announce that, I don't know, some insane results for some drug that everyone's been waiting for. Had I known that, I would not have just jumped right into this trade. So yeah, not the best trade for sure. And the moral of this story, as I've said probably about 50 times now, is really be careful with pending news releases on stocks, and at the very least be aware if you're going to decide to play the stock that the news release is coming. So, you know, have your expectations and reduce your risk for if you decide you're going to play that. Don't get blindsided by it, but don't be naive and just think that, oh, I'm going to be on the right side of this, because news releases are going to be very volatile. And I have learned now that I don't really like being in a trade with a massive volatile news spike like this. So as far as technically speaking on that day, it looked great intraday, but I would have never entered this trade had I realized at the time that that news release was coming. I just happened to miss that when that person in the chat room had pointed it out. So, all right, we just talked about several of my mistakes, and some of these mistakes were rather big mistakes. The thing with a lot of these mistakes are that had I been more aware and a little bit more like attentive about what the daily chart is telling me, what the intraday price action is like, I would not have entered this stock. And now I know going forward to be extra particular with my D1 entries. And it wasn't that I was like forcing a bad trade. I just wasn't seeing something that was very clear to someone else perhaps at the time, that it was like, well, you shouldn't probably lean on this daily chart because, in the case of like Redfin, for example, like look how choppy and low volume this is. This is not a strong move at all, right? Like right away, this should be a warning sign. And, now I know going forward to, I knew at the time, like obviously pay attention to the character of the move, but I just was like, oh, breakout, this looks nice. And I was not paying too much attention to this, which now I certainly will be. Um, so, anyways, I want to kind of conclude this video by saying that, you're going to have losing trades, right? It's going to happen. Even the pros, they make mistakes and make trades that don't end up working out well. The importance is that you always go through your bad trades and you learn from those mistakes that you made so that you don't make those mistakes again. And that's only going to help you grow as a trader because you're only going to pick better trades, um, and trades that have a much higher probability of success, and you're going to end up being a lot more selective and just wise going forward if you're truthfully going through your mistakes and being honest with yourself. So despite these bad trades, I feel really good for myself because it doesn't change my trading process of I need to be patient and pick the best entry points. I just have learned something new technically, that it's like, all right, well, I got to be careful and watch for X thing, Y thing, Z thing to keep myself out of trouble. And I've certainly learned that from these 5 trades in particular here. So for those of you who are just uploading your trades to your trading journal and not really going through your mistakes, number one, please do that. And number two, hopefully me going through my trades here, if you've decided to stick around for this probably ridiculously long video, hopefully I've inspired you to do so, because I feel very good after going through these stinkers of trades. So anyways, I apologize if I was rambling a little bit too much here, but for those of you who have stuck around, thank you for watching. Hopefully you have also learned as well what a not so clean D1 breakout looks like. And by the way, let me show you what a nice D1 breakout looks like. Here's Meta, right? We broke out here on this long green key bar. Market sold off a little bit the next day and recovered. And look at this. This stock, although it sold off with the market, it bounced back and it held this breakout perfectly. And it closed right at the high of this long green key bar from the prior day. And then the next day, it started going off. This is a much cleaner breakout. And also, guess what? Relative strength. Also, heavy volume. This right here is an excellent looking chart. Much better than Redfin back here, which didn't even have relative strength other than, I guess, momentarily on this day. But crappy volume, crappy price action, not a good breakout, right? There you go. That's what a better breakout looks like. Meta, take a look at that chart. That's really nice. All right, I'm going to shut up and stop this video. So I hope everyone has a good week, and I will see hopefully a lot of you in the chat room. Trade well.